Stocktwits Nation. It is Tuesday, April 22nd. Another wild week in the markets already. Before we get into that, Shay, how did your Clippers fare last night? I went to bed.
Uh, Kawhi is a baller. Playoff Kawhi, 39 points, barely missed. He was just unstoppable. Something about him is he comes alive during playoff time. It makes sense with his personality. He's never excited. He's probably too bored in the regular season. Playoffs is where the itch comes alive. But yeah, the claw came back. Love to see it. I still think we should be up 2-0, but I'll
Yeah.
take the 1-1. And yeah, I just that's probably the most. I might be a little biased, but I think that's the most entertaining playoff series so far in the first round. Is
Yeah.
the Nuggets Clippers? It's been close 2 straight games.
Yeah. Well, my Knicks faltered. Tough game. Thought we had it. We had our chances at the end. Just couldn't hit it at the end. I did recently learn this week though that apparently Sting is a big Knicks fan, and there's a photo circulating of him like wasted courtside. It's this is like the new obsession I have is just Sting like knocking back Mick Ultras at a Knicks game. But yeah, we're going to game three. I saw somebody do an analysis that you flew to Detroit and bought a ticket, it would be cheaper than a ticket at the Garden for the next one. So that's in play. But
That's
we
crazy.
continue to watch that, and of course the markets as well. If you guys were watching yesterday, Shine, I had a fairly normal show, and then the last 2 minutes, a tweet crossed the wire. Trump taking aim at Powell, a little bit of cyber bullying going on. The market tanked yesterday on all of that uncertainty. So triggering fresh fears over the central bank independence. Global markets were closed post Easter, but the U.S. came back to sell-offs. There's tension in the markets. There's growing unease. S&P ended up down 2%, over 2%. Nasdaq down 2.5%, and the Dow Jones also down 2.5%. Of course, though, today everyone's talking about Tesla, and we started to touch on it yesterday. But Shy, how are you feeling going into Tesla earnings today, reporting after the closing bell?
Yeah, I mean, Tesla obviously is reporting their earnings after the bell today. It's going to be somewhat of a special one because they're doing an event after the earnings as well. So what does that tell you? There's going to be some kind of story that's going to be revealed, and this is a story stock where we already know the numbers will be bad. We know that deliveries are missing. We know that sales are down. We know that Elon Musk is essentially off playing statesman via the Doge, and there's just so much FUD priced into the market right now. There just is, and it's really important to know why you're invested in Tesla. For me, I could care less about their EV business. I'm all about autonomy. I'm all about humanoids. That's why I'm investing in Tesla. So in this tricky transition period of becoming this EV company and then being this full scale autonomy company, that transition is going to get very choppy in the meantime. And that's Tesla's in the middle of that transition where they're going through a structural recalibration of what Tesla actually is and what it's becoming. And the numbers will look ugly. Yes, I think that's going to be clear. But the story is clearly shifting deliberately, quietly, and for those paying attention, it's actually kind of hardening if you look at the infrastructure that they're trying to create right now, where it's not just they're not just becoming a systems company. They're trying to build foundational infrastructure for a world that really doesn't exist yet, but it's going to. Like you're seeing already in the energy storage business, you're seeing their vision for FSD via autonomous mobility and the AI training hardware. Like all of this is stacking into a vertically integrated machine with optionality that no other OEM even pretends to match. So like this is going to be really important next 12 months. And I do believe Musk's role is temporary. Maybe today we're going to get the official timeline on when he's going to come back to be the captain of the Tesla ship. However, the backlash is very real of what he's caused the past 6 months. Like he has alienated consumer bases that will never ever return back to buying an EV. So he is making a really big it's a calculated bet, but it's a really big bet that his buddy relationship with Trump is going to deregulate a lot of these hurdles that autonomy was going to face, but he's sacrificing his EV business by alienating those consumers. And let's see if it works out in the end. Like he's hitting 100% on anything he does. So I want to side with like it's going to, but we're gonna have to see some substantial fundamentals start flowing through in the next 12 months on FSD and autonomy for this stock to really catch a bid.
Yeah. Close proximity to the White House, too, could be a double-edged sword. This is definitely a president who, I don't know if he's known for long-lasting friendships. And so, the bet's placed to get close now, could that come back to bite him later? Potentially. Who knows? I mean, Tesla's down 36% year to date. Dan Ives, other analysts, really doubling down on this brand damage that you brought up, Shy. And I'm curious, you kind of got to it, but like how much of Tesla's future depends on him showing up as CEO 100% of the time? And how long as an investor are you willing to wait for that moment to happen before you determine he's not all in?
I think I forgot what the language is. Like, I want to say he's supposed to come back sometime in the first half of this year. I think there is some language out there. So if
Yeah.
this extends towards 2020 after this year, I'm like, what's happening right now? Like, do you understand you're losing market share? BYD is growing really fast. On the autonomy angle, Waymo has a ton of momentum in autonomy. Yes, Waymo's strategy towards solving autonomy is drastically different on scale of what Tesla's trying to do, but they have a ton of momentum right now on what they're doing. So these aren't really end game signals; they're more like mid game pressures, if that makes sense. So like Tesla right now isn't built to win this quarter. It's kind of built to win this whole cycle. And cycles don't turn on a single earnings miss or two earnings misses. Like they turn on infrastructure, scale, and vision. And Tesla has all three of those. But in order for those to fulfill its potential, you need Elon to sit at the driver's seat because it's his baby. Nobody else can fulfill this vision unless he's the one guiding it full time. And that's a deal breaker for me. Like if this is 2026 and he's still doing his statesmanship duties, I might not sell my Tesla position, but it won't be a top five. It's actually not a top five holding for me anymore. It might
Wow.
not be a top 10 holding for me.
Yeah, and you think about just from a narcissistic point of view, legacy building, Doge isn't really panning out the way he painted it. If you look at the numbers, they're cutting some things and saving things, but they've got rather quiet, and the numbers that are out show their guidance of what they were going to cut is nowhere near what he originally said. And so, even from a legacy building perspective, stick to the robotics, stick to the automation.
Hmm.
But we'll see. I mean, do you think this special event is going to be some sort of big announcement like that, or do you think it could be more of like a show and tell of some of these humanoid robots or other tech designed to add some flash to counter the potentially bad earnings moment?
The latter. I think don't look at this little churd. Let's focus on the shiny thing over here that we're working towards. It's gonna be very. I think it's not gonna be that much autonomy because listen, Austin's happening in 2 months. So they don't really need to pitch it that much. We're going to see in action what it's going to be like for autonomy, but it's going to be humanoids. They're going to reveal something on humanoids. My dream scenario is they're going to license the humanoids to a different company in 2026, and they're going to start seeing real revenue through that. Who knows? Maybe like these McDonald's is going to start partying up with them, and they're going to see a robot deliver your Big Macs. Who knows what it's going to be, but like it would be really exciting to see some kind of licensing deal on their humanoids. We'll see if that happens. That's a Hail Mary, but I think it's going to be very robotic based
Yeah.
on today's announcements.
Do you think it's a possibility, either near term or farther term, that the government could be a main purchaser of the robots?
I'm underwriting that for in Trump-led presidency. I will be disappointed if that's not the case. I
Yeah.
think like he is humanoids is the biggest TAM in our mankind history. Like robotics, nobody knows the ceiling. It's going to be the most disruptive theme ever. So that's why like you're cannibalizing EV to deregulate yourself for these like new growth themes. I'm underwriting something substantially happening in the next 3 to 4 years to help with your humanoid vision. If it doesn't, this is a dud. This whole thing that he's doing is a dud because he lost consumers that will never ever return back to buying a Tesla.
Yeah. I don't know if you saw this, Shy, but apparently a humanoid robot ran a half marathon over the weekend. Uh, even the pictures are funny. The gait was very weird, but he crossed the finish line. He made it, or she, or whatever they. I don't know what robots are. But there was actually 20 of them ran and only 6 finished. But yeah, that's interesting. You could just imagine the other use cases based on the ability to run a course.
So they build robots who quit. Interesting.
Yeah. I kind of want to see like a mashup compilation of all the robots just like eating it, falling down, maybe taking out other runners. I'm a distance runner. I feel like the sport needs more contact and just more drama. So that works for me. But all eyes obviously on Tesla. We'll be watching closely. You can follow along, listen live in the Stocktwits app. Also, definitely leave your comments, leave your notes in there for the community to take it. Oh. Oh, it's good. It's kind of sad. Oh, I kind of feel bad. I know they don't have feeling. Oh, yep. Okay. Love that. Great. That's like it's going to be a new GIF I use. All right. So that's Tesla. Let's talk about Amazon. Shai, because you had a tweet this morning talking about how Amazon was trading at its lowest earnings multiple in history. You had a bit of a take there. Walk us through what you saw and what you shared, what you're seeing with Amazon.
Yeah, I was a little sassy this morning because it's just every cycle, narrative follows price action. People see, oh, Amazon. People were waiting at the door to line up to buy Amazon above 200, but now under 170, it's like FUD. They're saying, oh, it's a China exposed import business. Like 60% of their business is from China source goods. Like they're screwed from this east versus west fight, this tariff war. Like they're done for. Like maybe the next big company to blow up, etc. Like that's just so ridiculous. First off, facts. 40% of Amazon's business is essentially its own retail. So if you want to, nobody knows the China's percentage of China's source goods. Like just say 50%. So now it's 20% they're exposed in their total business on China's source goods. 20%, not what people are saying 60% out there. It's 20 because 40% of their business is pure e-commerce. The rest, the highest margins out there, it's AWS, which alone by itself is worth 1.5 trillion at least. I think it's worth $2 trillion. With their margins, it's just 40. I think it's like over 40% operating margin, and their top line growth is like 20%. It's close to a rule of 40 score of 60, just their AWS. So that alone is worth $2 trillion. Right now, look at the market cap for Amazon, $1.8 trillion. So I could care less about what the retail side of their business is doing. That's China source goods. But because you're essentially getting the e-commerce business for free, you're getting the ad side of the business for free, you're getting the Amazon Prime business for free. All of that is free right now. And I'm not even talking about the logistics robotics angle that Amazon has, where they right now have 750,000 robots currently this morning as we're streaming, working in their warehouses 24/7. But you see the stock price is down 25% this year. You want to throw a narrative, oh, it's because of China source goods, blah, 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 on their e-commerce. That should not move the needle on the stock at all because you're getting the e-commerce side of the business for free. Amazon has always sacrificed that arm of their business with low margins because they want mind share, as much market share as possible. It's worked for them. Now, maybe they're going to start being in the red on that side of the business, but they're going to more than make up for it for the rest of the arms in their machinery, essentially in their biz umbrella of Amazon. So I just want to throw some like facts out there. So because every comment I was saying on Amazon is like, oh man, almost all their business is from China source goods. Like they're screwed. Like no, it's not. It's like literally less than 20%. And even then, I don't think it's going to even move the needle compared to the other growth avenues that they have. So wanted to add that color in there. And fact check some schmucks.
I think it is important because like some of these companies, the names have become synonymous with products that are no longer their dominant product. We were talking about Google yesterday. Search is advertising is still their dominant product, but when you say Google, you're not thinking of cloud, you're not thinking of Gemini AI, and Amazon is one of those where you think, okay, yeah, Amazon, the interface I shop from, but to your point, it's a whole ecosystem. I don't know if you saw Bezos is backing an EV truck company, and they're pretty cool looking. Pull up a picture. They're kind of like Range Rovery, a little boxy, kind of Rivian-esque, but they're gonna market or they're gonna retail for 25K apparently.
That's it. Wow.
So yeah, so it's called the company is called Slate. But I think when I see stuff like this, it's interesting too because I feel like Jeff Bezos is also in lots of things. He's got the Washington Post. He's got his core Amazon business. He does stuff like this. He's working out a lot, sending people to space, Blue Origin. He doesn't get the same kind of pushback from investors as Elon does in terms of not being focused. And I wonder if it's just like his businesses are doing better and he generally stays quiet. But like as an Amazon investor, do you ever think about that? Like he's not as engaged?
Well, he's not in the captain's seat anymore. I think that's really
Yeah.
important where he doesn't have to answer to a board of directors.
Yep.
He's just again essentially a really prominent investor and founder, and he has a lot of wiggle room because of that. And
Yeah.
that is probably there is a mental capital that's required to be a CEO. It is. He doesn't have that anymore, and he's free to do a lot of different avenues. And that car you showed me looks very like a Bronco or a Jeep.
Yeah.
It's pretty cool, and
Yeah.
I feel like Rivian might be a little hurt from that because like Rivian's whole spiel is EV trucking, like that kind of style and vibe.
Yeah.
It's funny because Rivian has a partnership with Amazon. I
Yep.
think Bezos probably was the foundational partner of that when he was the CEO, and now he's doing this thing. Like it's a really interesting angle. But yeah, I know my fiance is gonna love that.
Yeah.
She
It's a
loves
great,
Broncos and Jeeps, and that
right?
looks up that element. Yeah.
Yeah, there's a picture I saw floating around on X. It was like a gray color that looked really sick. I was like, oh, I would do that. All right, so that's Amazon. Let's see what else we got. We had some earnings this morning. GE Aerospace and Lockheed Martin both reporting. GE Aerospace surpassing Q1 expectations with 1.49 EPS and 9.94 billion in revenue. They were all about optimizing operations, controlling their costs. They mitigated tariff impacts according to the company and maintained their full year outlook. I know that's something we've talked about shy of where companies going to change their outlook. They're sticking to theirs. And they also announced plans to invest 1 billion in US manufacturing jobs and factories, aiming to hire 5,000 workers. So GE, pretty good print. Any thoughts on them, Shy?
Not my lane, but it's nice to see a positive
Yeah.
reaction post earnings. But look at that stock though. Jeez.
Yeah.
Honestly, GE and like and IBM, like grandpa and gold, like your grandparents are killing it right now.
Yeah.
Where all the millennials and Gen Z are just like struggling with the growth. Like they're all like chilling in Palm Beach in Florida, just printing cash on their investments right now.
I know all these people who have been just like, gotta get the gold for like decades are laughing right now, assuming they held on. Lockheed Martin also reporting this morning. That's one we've talked about here a few times, talking about just defense budget cuts. Where's budget going? They had a beat, so they beat Q1 earnings expectations with 7.28 per share, 17.96 billion in revenue. There was strong defense demand, so we're not fully in this shift of like the new version of warfare, but as we've talked about, we're sort of heading in that direction. Their shares are up 3% in the pre-market. So obviously there's ongoing global conflicts going on that props them up. So they also had a good earnings this morning. So we had two decent prints.
So I do want to call out everyone. Like this is Doge hasn't really had this impact yet on these like earnings report that we're seeing right now. Like yes, like Q1 earnings, it's January to March, but like really you're gonna see the implications of Doge like in Q3 of this year. And my new age defense thesis, that my bucket of 5 names I have for that, that's not gonna happen in quarters. Like it's gonna be a prolonged evolution over years, and I just don't see a world where like we're gonna need as many missiles, tanks, or jets like we did in the previous um like in the previous world. I don't say previous world because like we're entering a compute cold war, and we're also gonna be entering new age defense where like it's the threats won't be things you can see. Essentially, it's not gonna be in the physical world. I just Lockheed Martin, like I don't know how much they're positioned for that. Yes, they have incredible lobbyists who probably will prolong the process, but I'm thinking long term, and it just feels like a dividend play from here on out unless they can create some kind of partnership arrangement, some kind of deal. I want to say, yeah, Palantir is worth 2 Lockheed Martins now. That just shows
Whoa.
where like we are in the new age of defense.
I didn't realize that. That's wild. Yeah, I think it's a good point. We're still early innings there. And then when you talk about compute cold war, it's interesting because after you first brought that up, I keep seeing it and hearing it. And even yesterday in court, moving over to Google in their antitrust case, Google's part of Google's defense is that, hey, if you break us up, we can't compete with China. So I think you're going to start to see this, whether that's the case or not. But that narrative has already been put out there by leadership in DC. I don't know. Do you agree with that, Shy? Like, are we breaking up our own companies? Do we harm ourselves in this East versus West battle that's going on?
Absolutely. I think there's 2 lanes. It's the same thing with this tariff war. It's going to strengthen our security, but who's this going to really punish? It's the same thing for this Google monopoly. Like Google's monopoly punishes SMBs. What does the tariff war punish? SMBs. It's either national security or SMBs. That's like the kind of spectrum of balance we're kind of monitoring in. So they're right. Like it's going to hurt national security, but it's going to substantially benefit the mom and pops out there or the SMBs. Which one's more important? I think clearly we're getting signs from Trump's presidency and his behavior that security, security, security. SMBs can like suffer a little longer, and once we tighten this up, we can help them out. But yeah, I fully believe in what Google said. It's actually truthful. Like
Yeah.
we want our hyperscalers to kind of continue mind share dominance, market share dominance, because that does strengthen USA. And if you break it up, it opens avenues of disruption because there's more slice of the pie. So every slice you get, you can miss your mouth and fall, and then or spill on your shirt or whatever it might be. That's an awful metaphor. I have no idea what metaphor I should say, but it does open a hole for liability.
Yeah, and I could see. I don't know if Facebook could quite make that same claim, but yeah, I think the other piece of that is it is interesting that like the values we uphold in our economy and our business, if we uphold them for ourselves, and this has been historically true, but if we hold ourselves to these principles, kind of shoot ourselves in the foot. But the alternative, and you see this with labor, the alternative is we lower ourselves to the standards elsewhere, and I think that's such an interesting tension point. And then just politically, to your point, the SMBs, that is a core political block. But maybe the calculus is that they're unlikely to switch sides altogether. They might be annoyed or frustrated, but that's a group that's unlikely to switch, and so they're taking that gamble. But it is interesting to see how these chess moves are moving and how they're thinking about potential implication down the road. The midterms are 2 years away, and that's just got to be hovering over everything that they're doing right now. So fascinating stuff in these antitrust trials. Let's talk about solar for a second, because I saw this headline about solar tariffs and I was like, this has got to be a typo. So this is a bonkers solar panel tariff that we announced. Tariffs up to 3,500% on solar panel imports from Southeast Asia. Targeted alleged dumping by Chinese firms operating in the region. I had to look up what dumping meant in this sense. It means when a company exports a product to another country at a price lower than what it charges in its home market, or even below the production costs, to basically kill off competition in that market. Shai, you pointed out one stock in particular was jumping on this news. Can you share who that was and why?
Yeah, it's First Solar, ticker FSLR. Like they're the leading U.S. manufacturer essentially for the solar space. To put in perspective on how disruptive this tariff is, uh, 70%, I think, or 75 or 80% of the total module imports in the last year alone are going to be impacted from these tariffs. That just shows it's not like, oh, it's a lighthearted threat. Like it's going to disrupt the whole space. And that's, I want to say it's $15 billion were imported last year from just the specific countries that this tariff is going to impact. So like that's why you're seeing First Solar catch a major bid this morning. Like it's up 7% pre-market. Like they're the leading U.S. manufacturers. I wouldn't be surprised where can you look up EOSE what they're doing because they're the First Solar grid storage. Like they are America's battery. So I want yeah they're up there
Mhm.
too. That's one of my favorite
Sunrun
small cap
too.
plays out there. Yeah,
Yes,
so
Sunrun's popping.
yeah, so solar is definitely going to be a hot place today. I think for solar and EOSE is going to be the bread and butter and the spec play. Those are really interesting pairings to catch a bid, especially in this macro environment where like we don't things are moving so quickly we don't know what the impact. Whereas the safe havens, you're getting gold is a safe haven. You're seeing Bitcoin become a safe haven. Palantir is somewhat of safe haven. The new age of defense, CrowdStrike, Palantir, Axon, Cloudflare, their cybersecurity is doing well. Solar, like First Solar, is somewhat of a safe haven where they benefit from east versus west turbulence. Who knows how long it's going to be, but they're a major beneficiary, and they got hit hard in the past year because when Trump won presidency, the IRA tax credits are going to get removed, and that's going to be a big headwind for the whole solar space. But guess what? First Solar is locked into long-term institutional contracts that don't really get affected as much as you think on these IRA tax credits. It's very much like the Microsoft business model where it's in a way tariff proof because their contracts are so locked in from such bigger players and long term. It's kind of like that for First Solar on the in the solar space. So I think this is one of those names where like, I get scared away from cyclical risk. Solar industry is very cyclical. I also just I'm not as passionate or don't have the conviction in solar as I do in my other thematics. I'm a thematic investor, so I'm not participating as much in First Solar. But as of right now, like it's trading at 10 times earnings. This might create some kind of pricing power now. If these tariffs are here to stay, that is a structural tailwind that's going to cause a re-rating on the stock, and it's going to punish on an IRA tax credit removal, which isn't really that impactful in the stock as much as the price indicates of being down 40-50%. So this
Yeah.
is a name to watch for sure.
Yeah, as we head toward the opening bell, I'm also noticing I was checking out the Stocktwits trending section of Verizon taking a tumble, and they just reported earnings. So interestingly, they had a beat, but they had some news in there that investors aren't loving. So they reported adjusted earnings per share of $1.19 on revenue of 33.49 billion. This was above analyst estimates, but they had higher than expected subscriber losses. So they experienced a net loss of 289,000 retail postpaid phone subscribers, and that was exceeding what analysts were expecting. They were expecting about 200K. So they lost almost 300K, and people were expecting 200K. This one's down over 4% in the pre-market right now. So yeah, I'd love to dig more into that one. I'm not quite sure what's causing that subscriber loss. I don't know if you have any theories, Shy, but that one is also making some moves as we head towards market open.
I'm sure I have no idea why that's a really weird product mix issue. It must be some kind of product mix
Yeah.
that's causing that. These kind of misses used to move Apple. That's like back in the day. I'm really interesting. It doesn't even hurt them anymore. But yeah, so the market's opening. Wow, I didn't realize they caught a bid the market past like 30 minutes. Qs are up 1.3%.
Wow.
Let's see.
Yeah, it looks like the Dow futures up 1%, S&P up 1%, Nasdaq uh, up as well. So it looks like, yeah, Dow's up 400 points. So trying to claw it back, trying to recover. I did see an interesting chart someone shared yesterday. I wish I bookmarked it, which I never remembered to do. But it was showing 2008, sort of the slide down and the jumps, the intraday jumps, and then down, and then up and down. And it's like if you bought the dip every time, you were just riding that wave down. We've talked about this, Shy. Like, you think we still got a ways to go before we're reaching the
Yeah,
bottom?
I you're gonna see a lot of distractions, but there's one issue, guys. It's East versus West. Until we get a resolution on China, like everything else is just noise. It's a shiny distraction. Nothing is going to change, and just tune it out. Like whenever there's a volatile time, like VIX above 30, you're gonna see so many news headlines, so much FUD. Like that's gonna distract you from the bigger picture. Like remember this. Like it's going to just be East versus West. So that's the big issue. We're below the 200-day moving average. We're not even close to breaking it. Let me see how much damage we've done. 492. Oh my God. We're 12 to 13% away on the Qs from being above the 200-day moving average. Just think about that. That's insane. That's not just going to be. I know we had that one day was an 8% move, but like we were so oversold, and during that time, like we're not even close to oversold right now. Like that's the scary part. When RSI, remember like what's the RSI for oversold? Under 30. Typically for me, that's like a accumulation stage. At that time, it was April 7th, I think it was. The RSI was under 20. We were way oversold. Right now, we're close to the lows of April 7th, like not quite there, but close enough. What's the RSI right now? 42. We're not even oversold. That shows how like this is looking like a lower high that's going to result in a capitulation to a new low, and the RSI is not indicating oversold at all because we had the velocity of that bounce. So I'm very bearish, and I've been very open about where I think the bottom is going to be. I think for Q specifically, I'm looking at 380 to 385 is kind of my range on where I can see a near-term bottom. And I think the paralysis, I've been calling, that's my word of the year for the stock market, paralysis. The second guessing you're going to see from C-suite, enterprises, and consumers will be reflected in the earnings reports. And as soon as we have one hyperscaler comments, we're going to be in the lighter range over CapEx. It's going to have a snowball effect potentially on every tech name, AI thesis name. That's going to be the capitulation catalyst, maybe that I'm like looking out for. And Nvidia is another one. Like I'm a huge Nvidia bull. You guys are all fully aware. Like I love Nvidia. I think they're kingpin of the new digital economy. They are not a hardware company. They're so much more because they're CUDA. Nobody knows how much China exposure they have. Nobody, because there's a lot of loopholes being had. Those loopholes are being plugged. On paper, it's 15% of total revenue. I've been seeing numbers of 40% of revenue is the real, but they're just finding loopholes. If 40% of that revenue is actually impacted by this East versus West tariff war, and these like alternative chips now being released in the market that you can't have this loophole anymore. We have to find a workaround, and it's not through Nvidia, it's through elsewhere. This stock could get cut substantially, and that's like when I'm going to be accumulating this name. I just don't know when that's going to occur, what's going to happen. This is going to be a wild earnings cycle, and like that's why I'm not adding these dips because like I want to have a 12 to 15% cash position because I do believe some of my high conviction names will have those massive gap downs on something that's macro driven. It's not thesis breaking. That's when I like to capitalize.
Yeah. The paralysis is interesting. I spotted this morning a prominent VC share a tweet. I love when VCs and other people do this, where they tell something anecdotally with no details, but actually Shield's pretty legit. If you guys follow on X, he was getting into it with Chamath last week. They were battling it out, but he's a prominent VC, a lot of fintech tech deals, but basically he's saying he heard from an investment banker that there was 12 M&A deals in flight a month ago, all 12 paused, too much uncertainty. Does that sort of underscore what you're saying, Shy?
I've been in these rooms, guys, with these CEOs. That's like I'm in corporate strategy my whole career. Like that's literally where I live in these we call it war rooms, especially during turbulent times. Yes, like I guarantee everyone around them are telling them to like let's just wait a minute. Like let's not stick our neck out. Let's not go aggressive on acquiring this assets when you don't know what kind of discount we can get in 6 months if we wait it out, 12 months due to these tariffs. Like you just don't know. We don't live in an environment where we're comfortable anymore. Like it's going to change. Like this house, you're not going to, here's a good metaphor. You're not going to redecorate your brand new house without buying the house first.
Mhm.
You're not going to buy all the couches. You're not going to buy the chairs. You don't know what the setup of the new house is going to be. So why would you do all the interior designing first and then buy the house? You don't. This new house I'm talking about is this new macro environment. You're going to have to wait to see what the macro environment is going to be like, what the structure of the house is going to be, and then you can decorate it with interior design stuff. That's kind of what a lot of the C-suite are. They're not having that interior designing conversation, but that's the metaphor I would use in these rooms to kind of tell the C-suite of like, I advise you can't do this. And I love metaphors. I always use metaphors in my career. Maybe it was bad because I was always the youngest one in the room, but I loved it. But that is exactly what it is. Like to the listeners out there, like you would never buy couches, buy the $50,000 of interior design stuff without knowing what the new house will look like. It's irresponsible. Same things happening in M&A strategy. It's just irresponsible.
Yeah. Do you think, are they, based on your experience, and it might depend, are they in pause, we'll revisit, or are they sort of wargaming different scenarios and plotting out and then doing like a risk assessment of moving, not moving? What is it? They stop altogether, or they're like, okay, if A then B, if C then D.
So typically, it's the two levers are pulled in M&A is margin expansion and revenue reacceleration. If you have those products into your ecosystem, if it's a minimal near-term impact that you just think like down the line it will substantially increase your pricing power in your ecosystem, those are going to be on pause because there's no rush. Like there really is no rush. But if there's one, if it's a type of product or company that's like, we need this now, or we're going to lose the narrative on our company or our spiel of our ecosystem, those are going to be more aggressive. Like I think fintech names, they're not going to be waiting it out. I think there's a huge narrative issue in fintech, and you're going to see a lot of mergers. You're going to see the same thing in cybersecurity. I think cybersecurity is a very crowded space, and it's going to get consolidated. I think DevOps tools, those will get consolidated. CRMs out there consolidated, but like I don't. I think that a lot of companies with consumer goods exposure or consumers discretionary spend exposure are going to be waiting it out because they know that they're going to get a lower multiple on the acquisition, and they're going to let the SMBs will be struggling big time in the next 3 to 6 months, like big time, and there's gonna be somewhat of panic, and when there's panic, that's when you can really provide leverage on acquisitions, and they want to utilize that. So I think it's just a wait and see mode, and it's the paralysis I'm talking about. It's very real.
Frustrating. Imagine working on a deal, months and months, maybe years, and then, you know, all,
Well,
this happens.
you know who's stoked about this? Lawyers, like the law fees, like they're gonna be, oh fine, like you want to rework the deal, we got to do more
Yeah.
hours, like type of thing.
Oh, you're right. You're so right. They're gonna be milking this. Couple breaking headlines just spotted. One funny, one serious. The funny one is CNBC is reporting that Andre Agassi is gonna enter a pickleball tournament, which does not seem fair at all. So I don't know if you could pull up that article. I thought that was crazy. I don't know why it's on a business publication, but I saw it and I'm just thinking like Andre Agassi playing pickleball against anyone just seems very unfair. I don't care how old he is. Like, do you
No,
play
it's like
pickleball, Shy?
I tried. I just need to find a good partner to play with.
I
I
guess
love
he's
it.
playing the best
I loved it
player.
the one time I tried it. But yeah, this is really unfair. It's like Adrian. Yeah, I mean, it's like Adrian Pearson playing against a number one flag football player. Like, no, it's like not even close. Like, so- it's like not. It's ridiculous, but it does validate the sport. Like maybe now pickleball isn't just like some Gen Z outlet that they like to play because it's this new hot thing. Like now Andre Agassi's playing it. Like it does think it's it really it validates
Yeah.
the whole sports. That's really interesting.
I mean, it is like so LeBron owns a team. I believe Josh Allen invested in a pickleball thing. It is it's big business. Like in New York City in Central Park, they shut down the ice rink and open pickleball courts. And they charge a lot and they're packed all summer. Um, old people, young people, but yeah, pickleball. In more serious news, the IMF is slashing its 2025 U.S. growth forecast. It was 2.7%, and they're slashing that down to 1.8%, obviously talking about the trade tensions. Obviously, this is just an estimate that they're putting out, but it's another signal that just adds to the bad vibes. So they're it's off their projections, but we'll see, because to your point, Shy, a lot of this is it's going to get worse potentially before it gets better. But that one just coming off hot off the press as well. Let's take a look and see what's trending here in Stocktwits. I also just dropped in the chat if there's anything you guys want us to talk about. Somebody had a funny comment, by the way, that the robots are going to come get us because we showed the videos of them falling, which that might happen. My favorite humanoid robot is the one in Terminator 2 or 3. It's the one that like runs very fast and very straight. That guy is terrifying. Somebody tell me which Terminator that was. Do you remember, Shy?
I don't. I never got into that series,
Oh my
that
God.
franchise, which is crazy.
I don't know if we can pull. It's so scary because he's such a fast runner. But he starts like really slow, and then he just starts booking it, and it's like straight. Like sometimes I'm on the treadmill. I'm like trying to do that. But let's go back to what you guys are talking about today. I'm gonna pull up. Is it that one? No, it's the guy with the buzz cut. He kind of looked like Chris Mullen a little bit. I don't know who plays him. Chris Mullen, by the way, I'm old. If you guys don't know who Chris Mullen is, he was on the Dream Team. Let's go to see what's trending on Stocktwits. Bitcoin. I know crypto is neither our fortes, but we're educated and we're interested. Some of the commentary I'm seeing about Bitcoin is it's finally sort of following gold, the pattern, but it's also I wish I bookmarked who said this, but talking about how it's sort of peeling away from the rest of the crypto market. So Bitcoin's kind of its own thing on its own trajectory. And when Bitcoin's rising, it doesn't necessarily mean other things are. That has been the case before, but apparently it's becoming more severe. So I thought that was interesting as well. But Shy, I know you're not like big into crypto, but like what would it take for like crypto or like direct investment in something like a Bitcoin to be one of the themes that you chase as part of this like new world order that you're building around?
Day to day, consumers. If I can buy Chipotle with some crypto, if I can buy some, if I want to go to the movies, buy some using some crypto. If I want to go buy suits out on Rodeo Drive, like I can use some of my crypto. Like those are the kind of like day to day moments I'm waiting for. We're not there yet. We're getting closer. I will say like what Bitcoin has reacted in the past, like this pullback is just so validating for the long term Bitcoin bulls. Like it just really is. It's not like this 2x levered risk on bet anymore. It's becoming its own asset class in a similar vein as the silver, gold, etc. And there is somewhat of a flight to safety now, in my opinion, with how well it's been acting during this pullback. It's not as explosive and so in your face as gold, but gold doesn't really have that unpredictability ceiling that Bitcoin has, where like Bitcoin can go up 50% in like a matter of months. Like gold can't do that really. So I think Bitcoin for me, to answer your question, is like I need to see it every day to be able to do it. Um, but B, it's absolutely validated. It's not going anywhere anytime soon, and it's going to be part of our future financial system, whether you like it or not.
Get used to it, people. Just looking at trending, I see SoundHound here. I don't know if you're familiar with them, Shy. It's an AI company, and they've had really volatile, like huge ups, huge downs. They're up 40% in the past 6 months. They're trending right now because they just announced a partnership with Tencent Mobility. So they do voice AI. So they have a lot of auto partnerships, some other use cases, but they're going to be integrating it into global automotive vans. And the discussion is really on the deal's potential impact on revenue growth. I know all of this because of the trending feature on Stocktwits. There's broader volatility in the AI sector, but have you heard of this company before, Shy? Interesting chart if you zoom out. They're kind of on a roller coaster.
Yeah, so close your ears for you SoundHound bulls. SoundHound is not a real company, in my opinion, for the
It's
AI
a
thing.
meme.
I think I put them in the same bucket as C3 AI. Like those, they're just both riding the AI wave that's causing them to have a lofty valuation and like um where it's misleading a lot of people on like the ongoing AI boom. Like for SoundHound specifically, I think it's really important to kind of talk about what is their moat, like what are they trying to anchor everyone their competitive advantage to in this new world we're about to enter. I think right now they're like, what's their market cap? $3 billion. That's crazy to me when I think they're making millions, like not even that much money. I should probably looking at. I remember like I went to SoundHound recently because my subscribers always ask me about it. I was like, all right, their growth is misleading because they made a massive purchase on, I think it's Amelia. I think it's $100 million purchase on Amelia. So again, acquisitions can provide short-term gains, but they often do mask operational cracks. And for SoundHound, you have to look at their gross margins. I think it went from like let me see. Yeah, it went from 75% to 49% year over year. That's exposing like inefficiencies lurking beneath its top line growth, which was misleading because it was just an acquisition. So compound that with the constant shareholder dilution to keep the lights on, it's essentially just exploiting this thematic at the expense of shareholders. And I think the broad like don't chase the hype without anchoring investments to what an actual moat and advantage is. And I see no technological edge the SoundHound has at all. Like there's no scalability and someone else just coming into that same space and just phasing them out. Like there's no high barrier of entry at all. And their dependence is purely on external partnerships, like you just mentioned on Tencent, and acquisitions. And pair that up with cash burn and speculative valuation. Like this is exactly what a bubble is. So
Yeah.
maybe I should have held back a little more
No.
because I haven't researched them in like 3 or 6 months. But I remember like this is
Yeah.
not a real
I
co
know that's
at
a
all.
popular one along the retail crowd, and that's an important call out that just because something is labeled as something doesn't mean it has the same
I
characteristics
didn't
of others.
I didn't even not know it was under $10. Like when I made those comments, it was like 20 something dollars. So like yeah,
Wow.
I just
Okay. Validated, vindicated,
yeah,
even.
I feel validated.
Yeah. I mean, that gets to an interesting topic, too, because when you talk about your AI bets, sounds like a lot of them are like security, infrastructure, compute. This is like an application. Do you see there being like an AI application company that you would be super bullish on that's like a layer above these fundamental pieces, or are you really focused on the building blocks that all these applications will live on?
So I think you guys hear me all the time say like the AI tsunami is coming. Like you're gonna see a lot of names benefit from AI initially. That's not going to be the case long term. Like what AI does is essentially provides efficiency, productivity, replication. Tools will be replicated at a rapid pace. Like I can create a product with an AI agent. That's something that Datadog provides now. For the whole advantage that Datadog has had and observability, making preventing customers from overspending on the cloud, I can just do that now with an AI agent. Why do I need Datadog? Why do I have to pay that fat amount? So that's why like applications, like it's really important to capitalize on AI via application, which is second stage, by going added with the infrastructure angle, ecosystem angle, because the crown jewels of the .com era, it wasn't just like the websites. Those websites is like the applications in this environment. Like those websites went under because they were valued at something that just like, oh, it's an interesting website, but like, what's the real advantage? What's the stickiness? There was none. The marketplace is built on top of the artery. That was the ecosystems that sustained itself and grew into the Amazons and Googles. That's why I'm focusing on the infrastructure stage of the applications where 40% of the Fortune 2000 data is stored into the Snowflake ecosystem. It takes years to migrate out of it. You won't. So that's sticky to me. Cloudflare um, essentially runs 20% of the internet and you don't leave it. Every website you go on, primarily, like you'd be surprised what's powered by Cloudflare. Another one is CrowdStrike, like shut the world down for a couple hours, 3% churn, 97% retention rate. People can't. It's hard for them to leave CrowdStrike's ecosystem. Like that's why like these applications like SoundHound, like oh that's interesting, but like it's not going to move the needle in a couple years. Like it's probably going to get disrupted in some way. Who's it to say that Tesla doesn't offer a similar product in their cars in the Cybercab network? And now all of a sudden, like if autonomy is becoming the reality of today, and everyone essentially doesn't own a car anymore, which is part of my thesis in the future. Like, people won't own cars. They're gonna essentially cars will be a service, and nobody's gonna want to own their own car unless it's like a vintage or really nice car. I think that's highly disruptive to SoundHound's business model. Like you have to think about like what's the potential headwind, and there's so many headwinds that can come if you don't own the infrastructure or sticky ecosystem that creates a high barrier of entry for future competition. Like so that's kind of why it's really important to dig deep. Don't just trust like oh what the numbers are, what the C-suite vision is on the conference calls. Like you have to actually know the product inside and out. How's it going to fit in the synthetic AI world about to enter, and know the code inside and out, not just the metrics.
Yep. Great advice as we're all reassessing everything in our lives these days, including our portfolios. I want to end on one item that caught my attention because we always talk about the degen economy. Of course, Howard, who is the CEO of Stocktwits, writes about this all the time. This sort of everything's a bet, everything's a gamble. I don't know if you caught this, but people are betting a lot of money on who the next pope's going to be. I'm an ex-Catholic, so I don't really have any skin in the game. But I feel like we should make a bet, Shy. And maybe we could do like, because I think they're going to announce it in a few weeks. We could do 10x the SoundHound price on the day they announce it. Is the amount.
All right,
I'm gonna let you pick first, though.
I'll go pizza.
The first guy?
No, pizza. The third one, Pizza Bella. Pizza Bella.
There's a pizza on there? Wait, I didn't even, I gotta zoom in. Hang on.
Pizza Bella. I gotta go with that one. So I'm gonna call him
Pizza.
Pope. That's gonna be the nickname, Pope Pizza. So I gotta go with that one.
There we go. Oh, Pizza Balla. That's not real. Pierre Battista Pizza Balla. Shit, you got the best one. Okay, I'm gonna go. I'm going. Where are these guys from? Matteo. I guess I'm gonna go with Pietro Parolin. He's the front runner currently. Okay, we'll report back. Hopefully, SoundHound doesn't go nuts because that's gonna get real fast. But man, yeah, everything's a bet. I wonder if anyone inside the conclave is putting money on this and politicking around that. Makes you wonder. Yeah.
That's not fair. Katie has one as an ex-Catholic.
Yeah,
like,
I already have
one.
I have a Pope outfit. I got rosary. I got all my stuff. I just got to dig it out. From the last time I used it was probably college. But we will see. Man, you guys are nuts though. Betting on everything. Well, we will be back tomorrow at 9 a.m. with a lot to discuss, primarily Tesla earnings, which, as we mentioned, you can follow and listen within Stocktwits. We'll be back here covering everything that's going on. Thanks for joining us, and we'll see you tomorrow.